Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for October 4th, 2007. Well, today was Thursday, and just like a normal Thursday before a very important jobs report, we had slow volume today, extremely slow. And I'm going to get right into the chart analysis here, and then we'll get into some other odds and ends with various stocks and technical analysis tools. What I want to show you here is the ES, and this is the ES futures, the S&P December contract, and this gives us a little better analysis technique to the overall market when looking at candles. Those of you that don't have access to the ES Z7 contract can always follow the SPY. The SPY, or the spiders, follows this generally almost as well, just not quite as well. What you guys saw here today is a very, very light trading. We saw the overall market end up slightly. We saw the Dow ending up 6 points, the Nasdaq 4 points, and the S&P about 3 points. Overall, again, volume was extremely light, and if I want to give you guys a sense of this, we've been saying how the previous days have been somewhat light in volume, and we've been doing between 1.2 and 1.5 million contracts on the ES. Well, today we barely got to 1 million contracts on the ES. Extremely light, guys, and overall you see it was just choppy trading. Overall, we saw a little more variance early in the day, but by the afternoon things got very, very tight. And I'm just going to break out my trend tool and show you guys the triangle that was created here. And overall, you can pretty much look at this right here. Triangle, and you can see right here, nice little triangle. So eventually what's going to happen, guys, is you're in an ES pattern right here where these two lines will get closer and closer together. And just like any stock chart or market chart, you can follow this triangle. And what you're going to look for now is eventually, at some point on the ES or any general stock chart, for a breakout, a close above the high of the triangle or below. And should it take out the low, you're going to get more downside risk here, a downside spike. Should it take out the high, you're going to get a move to the higher levels. And again, that's why triangles are nice to follow. And you can find out which way they're heading, which way they're angled, and just be ready to jump on the side of the market that it works for you. Okay, now the other thing I want to talk about, guys, is we'll look at the daily chart. And you can see here, I'm still following this. This we talked about yesterday, a possible little M pattern formation here, and we will find out exactly what's going on here. We started to move down a little, and this is a possible M pattern. M patterns again form MAs. MAs are technically bearish patterns. They are breakdown patterns, and what you usually see here in an M pattern is a spike down to form the M, then you get the A pattern, and then again you get the move down afterwards. The little A on the side and a breakdown. Now, again, we've been following this trend here, guys. This is the key trend as far as I'm concerned. This is everything on the downside I'm worried about. Whether or not we close below this line is what it's all about. And again, that'll coincide with the MA pattern and the A's being the breakdown. So we have a couple things we are closely monitoring. Okay? So again, you see that M, you'd form the A. After we come down here, you'd form the A pattern, and then the breakdown pattern below this trend line, which happens to coincide right with this 20 moving average. Should we break that 20 moving average, you can look for us to bounce off the 50, at which point we'll have to find out whether or not we go lower or not. Now, there is some key economic data coming out tomorrow. Now, this economic data has been awaited all week by the market, by Wall Street, and that's the jobs report. Should this, it's going to be very interesting to see how a market reacts, because what we commonly might think of as a normal reaction, let's say the jobs number comes in very light. Well, does that mean we sell off? A lot of people would say yes, but that's not always the case, because in many instances, a light jobs number, where there's less jobs or the data comes in light, that could mean the Fed could cut rates again, and that would be a positive for the market. And the other side of it, well, what if it's very, very heavy? Does that mean, what if there's a large, move up in this barometer of the overall markets? And the question then becomes, well, is that good for the markets or bad? And the idea could be, well, it could be good or bad. It could be good because it means the economy is stronger than people thought, or it could be bad because then the Fed won't cut. So you guys see the conundrum here. This is very interesting data, and it needs to be monitored extremely closely. And overall, we personally at InTheMoneyStocks.com generally don't like to have any market plays, index plays in the market going into news like this. Because yes, if let's say, you guys know yesterday and the day before we've been holding that DXD, but the key here is we did unload that position today. We took about 61 cents on the position today. Sold the DXD at 46.11 after buying at 45.50. And the idea here is you don't necessarily want to be in the market long or short going into a number like this. Now, the overall market remains overbought, and we still see the stochastics here, but intraday, meaning that tomorrow, that doesn't mean we can't spike up. All right, and the idea here is that if you're long or short an index, you're really just going to the casino and putting, whatever the value is of your possible gain or loss on red or black at the roulette table, or vice versa, or some other game, because you're really just having 50-50 odds, because the market in general is going to do what it's going to do intraday. Now, we might, on the longer trend, we might be trending up here, which means even if we spike down, maybe we spike back up and continue the trend. But intraday, it could be very bouncy, and that's the key. You don't want to get stopped out. You don't want to have a dollar stop on a trade, and because of the craziness of a jobs number, you get taken out. Okay, so we did unload that DXD position, took the profit, and we will wait until after the jobs number to reevaluate what the markets are looking like, and then we will go forward. Okay. And again, we look at the in-between areas here, and the key is, guys, even if what we need to understand is the market's in a very bullish sentiment right now. And with this jobs number, even if it comes in where the market might think it's a bear, it might still push the markets up. However, if we do surprise in a certain way, we could seriously spike down. So again, I just want to reiterate that we did move out of that position in the DXD just to be on the safe side. Whether or not it goes up or down tomorrow based on that number, we don't know, but we're not willing to risk our hard-earned money on that. And that's a key to profitable trading. That's why we are profitable year after year, is because we don't take unnecessary risks. Okay, folks? So that's that, and let's just look at the Nasdaq. We continue to see the Nasdaq being slightly stronger on the charts, and here's the intraday. And again, you guys see the general triangle, although look at the breakout towards the end of the day on the Nasdaq. You did see this is a good example of a breakout. You see the triangle formation here. We came all the way down to the bottom end of this triangle, and then we actually, by the close, we did break up. Yet the one thing that's interesting here is we did basically double top right there at the highs of the day. And that even triple tops. You can even look at that as a triple top all the way to this point, to this point, to this point, a triple top. And that is where we ended the day, right on that level. So tomorrow we will see what that jobs number is. It's going to be a huge number, and we will await to see what it does. What I also want to talk about is a little bit of odds and ends. Of course, we've been talking a lot about day trading lately. The day trading market is just phenomenal. And I'm showing you guys another one we had talked about in the chat room, the GOAM. This is one I constantly mentioned over the last week. Watch this, watch this. We've seen accumulation, we've seen volume. And I want to show you on the daily what was going on here. All right, over the last few days, look at this. Okay, we had a volume spike here, but it lost all its gain. Then over the next few days, we had some nice volume. And yesterday, we had a good volume again. And it was looking like it was trending up right here. And you got little bits of breakout volume type moves. And we saw large blocks on the level 2. So between reading the level 2, the increase in volume, the slightly up moving trend here looking like someone's accumulating. In addition, on the level 2, we noticed 15,000 share blocks being bought up and sitting on the bid that were being filled. If someone's willing to buy that type of size, multiple blocks like that, in general, they're the big money, and the big money is going to create something for a stock and push it a certain way. Having said that, we did see this happening here, and we were able to alert everyone that this was probably going to be the end result, and look at that move. All right, you're talking about a breakout of a range from here. Now, all positions should be closed out as of today, and they were, for the most part that I know of, all the way up here near 650. And that was a phenomenal trade in the chat room. All right? In addition, we also saw some odds and ends, and I'm just going to show you guys really what happened. You saw volume pick up right here, and that was the dead signal. Right when this volume kicked in right here, and right here, this is that it was going to go higher. So anyone that picked up in this range got a nice boost up right here. Okay? In addition, we are starting to see a little weakness coming in some of these Chinese plays, and we've been talking a lot about them. RCH, let's look at the daily. Look at this reversal today, guys. This is a bearish candle. Now, what are you going to watch for on this? Now, it's a new issue, so a lot of people can't short it. Really, it's just naked shorting if you're going to do it, which you have to talk to your clearing firm if they allow. Most clearing firms won't allow it. But what you're going to see here is that this is called a topping candle, okay? And what you're seeing here is a lower close in the lower areas of that chart in a long, long tail. A break of the low of that candle right there, a break of that low tomorrow, and you will get a significant sell-off. So watch for that, folks. It's very possible that it will happen. All right, so on RCH, we're watching that. In addition, you see CHNR. CHNR was up again, but look at this candle. This is showing me that there's weakness coming in. CHNR is China Natural, and look at the move it's had. It's got to eventually come back in to that 20. Now, if this 20 continues up like this, I do expect the chart to meet it somewhere in this range right here, back at around $25 a share to 30. So again, watch for that to come in. It doesn't mean it can't push up in the near term or pull back a little then spike again, but at some point that chart always needs to touch that 20. It's kind of like the magnet, or it's always pulling you back. All right, and that chart should continue to do that. In addition, we've seen some other things start to roll over. JRJC was down $2 today. This is what I'm calling as a nice topping area here. We have the long tail here. We had a box kind of created here, and that is what we are following to see here, this little box. Once we break this low right here, guys, you should get a nice little retraction in this stock, and it should go lower. So again, the China stocks are coming to a close here, and we are going to watch Research in Motion. Research in Motion had earnings. Research in Motion had earnings after the bell. Right now, we'll show you the level 2 quickly, what it's doing. It initially spiked up over 100 to 104, then down to 93. Now it's back to 100 basically at its closing price. This is going to create some issues tomorrow. We're going to follow it, whether or not it goes positive, but it's going to be very interesting. All right, folks, have a wonderful evening. We'll talk to you tomorrow. Watch this market on that jobs report tomorrow.